Hello traders, Gary Wagner here, just after 9:30 in Honolulu, 3:30 in New York on Tuesday, the 19th day of May 2015, and this is the daily report for gold and silver. We do have dramatically lower pricing across the board in the precious metals, with gold currently trading off about 1.6% or $20 lower on the day. We were stopped out of our trade, currently trading at 1207.90. The low is 1205 and the high 1225.50. Silver also trading lower on the day, actually off about 3.5%, 1711. We were stopped out at 1709. Current market is trading at 1711. The low on the day is 1687 and a high of 1773. So traders, I want to start today's show by looking at the recent action and trying to make some sense of it. This move that we have seen, this downside move, has been predominantly a dollar strength or dollar-based move. In fact, when we look at the Kitco Gold Index, and that's what I've just pulled up right now, you can see that in terms of today's trading range, $14 of weakness is coming directly due to dollar strength, with only about $2.95 of selling. If you look at yesterday's action, in which the market was up a couple of dollars, it was up a couple of dollars, in essence swimming against the stream. A salmon swimming upstream is the way I described it, and that is simply because you've got such dollar strength. You can really see how this market has come down, and more importantly, when we start to look at some of our short-term studies, the writing was on the wall last night, but we can see that it was absolutely unable to take out the resistance area that it had initially plotted over at the end of last week. And as a matter of fact, traders, I was looking at this market last night and giving some real serious thought to actually sending out a recommendation to exit the trade. And the reason that I had felt this at the time, I thought we might see some recovery, so I did not do that. In hindsight, that would have been the best thing that I could have done. But what I was looking at as we studied it last night was the fact that we did have some weakness coming in, and this was a predominant candle that we saw last night. The market was trading at around 1220, and it had substantially broken below this resistance area. And so in terms of a very, very short count, we were looking at the possibility, once it broke through this area, for the market to trend to this area around 710, this being the low at around 1200. So what I in fact think we'll see in terms of a wave count is a completion. We've got a 1, 2, 3, 4, and 5, and we should now get some sort of an A, a B, and then a final C down. So if we look at this market through the eyes of Elliott Wave right now, somewhere between this area, meaning 1210, as low as say 1200, we should find some support. That would be this particular A. We would then get a B. B would be anywhere between 50 and 75% of the move down that we see in A, and then a final C down. The one thing that we can say with this recent activity is that we had an absolute failure to break out substantially out of this range and to break to higher ground. So traders, is today's downside move, and you can see the magnitude of this move right now, but is today's downside move a game changer? Well, in some ways, it certainly changes the equation that we're looking at. We took a look at this long-standing resistance line. We absolutely saw this resistance line get taken out, but with this most recent activity that we saw today, we're well back into this trading range. My sense is when we look at any kind of a candlestick pattern that's available, and let me go ahead and blow this up a little bit, what you can see is as this market, we're looking in this area here, but as this market moves up, we did get this umbrella line. You would call it a hanging man. You certainly did not get confirmation of that. But now you've gotten this long red line, or the range that the market is traded in, absolutely taking out this entire area. And that, to me, would signal lower pricing ahead. The key on this whole market, though, has been the dollar. And it's whether or not the dollar begins to reassert itself and the correction that we saw after hitting 100 and moving down is over. And we've just gone ahead and pulled up the dollar index chart. We made a note as we looked at this yesterday of the absolute strength of the dollar. You can see that here you have an inverted hammer. An inverted hammer, of course, is the opposite of a shooting star. This is very much shooting star-like. You'd like a little bit bigger of a body size. This is more of a shooting star just in terms of a straight candlestick pattern, not the necessary outcome, but that's really what you look for when you look at a shooting star. But you have this inverted hammer in engulfing bullish. Today you get confirmation. So on a technical basis, it does appear as though we could be seeing this market move into another phase of higher pricing. Where's the next area of resistance coming in? That's got to come in right at around 96. So traders, of course, the really big kicker or mover today in relationship to the dollar strength is been silver. The entire commodity complex has been hit hard to the downside, of course, with the strong dollar. When we look at silver, we are looking at a daily chart in silver. Same type of hangman that we saw a day just prior to this activity. You had a nice move in the market yesterday, and of course today you're seeing this strong downward move. My sense for where this market could head, if we see further pressure in the market, it's probably headed to about 1650 on the charts. This has been Gary Wagner wishing you, as always, good trading, and I am greatly sorry we certainly didn't get that today, but we'll get back on it tomorrow.